Everyone, hello, this is Nida Wasif. I welcome you all on this exciting panel discussion on secrets to finance for hundreds of unique minds. This is Nida Wasif, your moderator for this session, and truly honored to have you have such brilliant minds on board for Future Fest. Future Fest is a technology event, Pakistan, one of largest technology event taking place from 26th to 28th of January here in Lahore at Expo Center. Welcoming you all to join us virtually, giving a brief introduction about all the panelists that we have on board. So starting with Mohamed Hisham from sunny Egypt. He is the founder and CEO of Dajin platform, a wealth grid venture studio startup that creates and invests in innovative artificial intelligence. I'm very keen to learn more from you about AI and the fintech solutions. Mohamed Hisham has over 18 years of experience in various domains such as management, lending, SMEs, investment strategy, corporate banking, international trade, finance, and startups. Next on the panel is Ammar Amdani from the US. He is a co-founder and managing partner of Adapt Ventures, which is a leading early stage venture capital based in New York and San Francisco. Adapt's successful investments includes payment unicorn Clara, as well as companies such as Lasky, which was acquired by Twitter. Ammar, just let me know if I pronounced the name of your company correctly.
Yeah, it is.
Thanks the one which was acquired by Twitter. All right. Okay, great. Then we have Ilya on our panel. He's a serial fintech entrepreneur and co-founder of Ringkas, which is the largest mortgage platform in Indonesia. This is Nida Wasif. I am currently working with Pakistan's largest oil marketing company, worked on the development of fintech product. So it gives me all the more pleasure to speak to people who have been investing, mentoring, or working in the fintech ecospace or the digital aspect of the financial sectors. From all my panelists, I would like to take a start with this fact that according to an article of Forbes, around 10% of the startups barely make it through their initial year or slightly more than that. Since you all have hands-on experience in the startup industry, either as your own or as an investor or even as a mentor, could you share some lesser known facts that is a must to focus on when having your own venture and driving its growth and making it to sustainability? So may I start with Ilya?
Sure. Thank you for the question, and good to have everybody here. Now I'm running my third startup, and I think from previous experience, what I've seen is that obviously before jumping into anything new, I think the most important is to be ready and to prepare in advance. So I think before starting Ringkas, which was about 2.5 years ago, we spent about 8 months doing research and talking to all the stakeholders if a business model like ours could work. So I think to all aspiring founders who are out there and before they launch something, I think it's very important to spend their time, not to rush things, and really to understand whether a product when it hits the market, it can be viable and can be monetized. Obviously, a lot of things will still change along the way, but I think preparation is key. So I think that's something that will avoid you having a lot of mistakes. And what I also don't advise founders is to go and start spending a lot of money from day one on things, because you still don't know whether whatever you're going to develop works. So just do it step by step, pace it out, learn from every iteration of your product, talk more to the customers, be very open about your idea, get feedback. I mean, all those things I think can help you to avoid mistakes in day one, and hopefully your startup can last more than a year.
Okay. Can we have this? Can we have more feedback from Ammar?
Yeah, no, absolutely. Well, first off, thanks for having me. I guess my take on it echoes Ilya's to some degree. I think this is probably not a lesser known fact, but and probably more obvious, but focus on what feels natural to you. So if there's an industry that you have some prior experience in and have some built-in customer relationships, really focus on those relationships, focus on that industry, start in an environment that you feel natural in, and once you start gaining some traction, speaking to some initial customers, really hone in and be laser focused on what they're mentioning. I think about 42 or 43% of startups, if I'm not mistaken, fail due to misreading market demand. And so, this probably ties in directly to that.
Mohamed, Hisham, can we have your take on this question, on this point?
Yes, sure, but I would like to thank you all for having me today. I have another perspective regarding this topic. Sometimes the founders themselves they have the problem by initiating a preliminary business plan, which includes a minor working capital just to make sure you grab the attention of the investors and just try to working. And sometimes the working capital isn't sufficient enough to have the blood in your startup. So sometimes the founders themselves have the main problem for giving some finance accessibility and some burden on the startup. So I'm always focusing on this. If you are trying to make a new creative business model for a new startup, however, it's going for a fintech or it's going for credit scoring, just make sure that you have available and immediate working capital under your command, just to make sure your startup can get more and more and get some oxygen, if you let me say it like that.
All right, absolutely. So I was earlier today, I was going through some article and came across a news that a food delivery startup here in my country was thinking on the lines of shutting down their business because they were facing some sort of a financial crunch. So this is one of the news which has been going on around and about post-pandemic situation when startups have started to face some financial situation which eventually prompted them to roll back from their business stream. So what is the financial element which often gets overlooked by startups, which actually leads them to a closure situation or actually a layoff? When layoff takes place when the organizations are really very big, but as a startup in their initial stages, what is the financial element which they often overlook?
Yeah,
Ilya,
I can kick off on that one. I think, look, it also depends what type of company you're building, right? So I think it's very important to understand that there are different type of companies you can build. You can build a venture-backed company, right, where you go and try to raise money from VCs, which is, quite common in tech. But it's not the only way, right? You can also go and, bootstrap your company until, you generate decent revenue, even are profitable, right? So, and it's not necessarily wrong. And then you can go and maybe raise later, but it would be more like growth capital and so on, right? So I think, so based on those models, obviously you have more or less risk of getting on that, kind of like funding drug, right? So because obviously once you get a lot of VC funding in, then you tend to usually do the usual mistakes of over hiring or over investing in certain areas that are probably less fundamental. All right, so I think the one of the main mistakes I would say is over hiring. And also hiring is something that it's challenging to reduce costs fairly quickly, right? Because headcount, it's always subject to local regulations and, severance pay and so on. So I've seen many startups, have their runway drained just because they have too much headcount. Right. And I think that's one of the main mistakes I would say. If it's sales, if it's marketing spend, usually that is easier to turn off. Right. So I think one of the things for fellow founders is if you do take venture capital, right? So think of the areas where you can be, you can optimize more still. And if you really need to cut costs, it should be something that is fairly easy to be done. And in headcount is not always the case. So that's at least in my experience.
all right, Ammar, what's your point of view on this? Since you're an investor as well.
Yeah, I think oftentimes founders forget that venture capital is just a tool, out of many tools that a founder has available to them. It's not the solution itself. And so, once founders start to think that you can continuously raise more capital and have access to capital, it's often, then where, founders really struggle. VC capital is meant to, pour fuel on the fire, not ignite the fire itself. And so oftentimes it's really important for founders to remember to have some sort of, product market fit, or at least a direction to get there before they raise on any capital to really scale. And I think in the current environment with capital becoming increasingly more expensive due to rising interest rates, investors are no longer willing to put capital into behind companies that don't have clear product market fit.
Okay, great. Hisham, do you have? I would want to learn your perspective on this.
Yes, I want to add on what Ilya was saying, but from the other perspective. Sometimes founder, especially after grow at any cost stage has been ended, so they are focusing more on the unit economics. Sometimes they are very focusing on how to spend the working capital, how to make some hiring. And recently, for the last year, I found the different, especially in the MENA region, the difference between when you are making over hiring, now you are making a less hiring, and you are saying, I want to reduce cost, I want a deal. And this is a very killing perspective for startups. Startups needs a lot of innovation, need a lot of hiring, need a lot of money just to make sure you are making the proof of concept and you are going a good acceleration process. So I'm just saying this at the downturns of the growth at any stage or at any cost, because some founders are reducing a lot of cost, which is not the scale of the startups, the real startups thing.
I agree with you. I mean, I think one just the thing to add is that, I think there's always the risk that, in tech startups that you become like just an SME company, right? A small, medium business, right? And which at the end of the day will not experience, hyper growth. So will not attract talent, will not attract, investors, and will become, maybe a small size, but profitable business. So I think over optimizing can lead you to that. And that is obviously very dangerous, because then you're, probably tech founders are there for building different type of businesses, right? So I think I agree with you on that.
Thank you.
Okay, great. So what even I have observed around in my ecosystem, that startup organizations, they were actually recruiting very expensive headcount. They were recruiting people at a higher pay, which otherwise even multinational organizations were not paying them up to that level. And with that amount of cash coming directly into their pocket and not through the means of some intangible perks, they were those resources were joining those startups. But after about a year, we did see them in the market trying to reach back to their corporate organizations. So yeah, the spending level has been in a situation where it was probably not balanced too well. Moving on to our questions for the panel. Ilya, can you share with us more about your startup, Ringkas?
Sure. So Ringkas, we started about, slightly more than 2 years ago. So we define ourselves as a mortgage platform. So to explain a bit more what we do is it's important to understand the nature of the Indonesian market. So Indonesia, there's about 270 million people, and there's about 14 million households that don't have a house yet. So that's what's defined here as a housing backlog. On the other hand, you have mortgage to GDP penetration ratio below 3%, right? Just to compare it, like India has about 11%, US has about 50%, Malaysia 22%. So it's one of the lowest in the world. So definitely a lot of issues around, home financing, even though the demand is very strong. So when we started this business, we were thinking, okay, how can we basically unlock a portion of the market and bring it for the banks to underwrite, because we've realized that the banks, traditional banks in Indonesia, are mainly focusing on the premium segment, just because their origination is still done mainly in a traditional way, through a long chain of people, and those are incentivized by commissions, and commissions are higher if you buy like a more premium, expensive house, right? So what we did is we started digitizing the whole mortgage origination process by embedding our software into the operations of large property developers in Indonesia. And that worked quite well because it allowed us to basically have a low CAC, since we basically, they use it as their software to onboard all their customers, to channel them towards the banks. So on one hand, we have large property developers. On the other hand, we partnered with all the banks in Indonesia who do mortgage. So it's about 21 banks at the moment. And basically we have all the mortgage lenders. So we created those pipes that from property developers goes to the banks, and we allow customers to basically onboard on our software, fill in one application that would go digitally to multiple banks at the same time. So you don't need to anymore do it manually and fill paper forms for each of the single banks one by one. So we started that, and then last year we really managed to kind of like hit a point where we said, okay, this is working, let's try to scale it a bit more. So we scaled the platform, and now we're live in 44 cities across Indonesia, doing close to 1 billion annualized mortgages per year, USD. And I think it's been a hell of a journey. It's really exciting. Obviously, a lot of operational issues to solve since we are live in so many cities. It's across about 600 branches, bank branches, so more than 2,000 bank employees using our software on a daily basis. So definitely exciting. A lot of challenges. Still, startup journey is always ups and downs, but so far it's been great. I think you're on mute. We cannot hear you.
Yeah, sorry. So can we state that your startup is acting as a bridge between property developers and the banks and the financial services?
It's correct, but so basically it's property developers, customers, and financial services. So property developer is a means to acquire customers, right? Because in Indonesia, usually people would go and look for a house first before they look for financing. So that's the natural behavior. So they would go to the property developers, find a house, and then and then the property developer usually will help them to figure out the financing. So we basically embed our software in property developer operations, but you're correct.
Great. And it's also coinciding with the digital transformation, the process that you've digitalized into one platform and one application going out to multiple banks, obviously as per the need of the partner. So what is the adaptability rate so far? You mentioned a number of 1 million.
So I mentioned the number of 1 billion USD of
1
mortgages.
billion. Okay, great. Okay.
We're doing about annualized 1 billion USD. So in terms of size, we are already comparable to probably some of the smaller banks here in terms of size of mortgages originated. So that's and that has been possible just because we've partnered with very large property developers. So our property partners, they are selling 10,000 houses a year and more, some of them. So the scale is there. So that allows us to hack the model a bit.
All right, that's a great number, 10,000 houses in a year. Ilya, last question from you. Before you came into commercial activation with your startup, how long did it take you to establish your grounds for it before your commercial launch?
So in our case, quite long, because we are regulated startup. So we are regulated by the financial authority here in Indonesia, which is called OJK. Since we are basically originating very sensitive customer data, and we also connected to a few databases to understand customer profiles and so on. So it took a while to get licensed, and we also ISO certified, and took a while to get all the banks on board, because obviously there's a lot of DD from their side. So I think in our case, it took us a year to get the license, and then another 6 months to basically iterate the product and make it work. before we started fully monetizing. So it's about a year and a half, but in our case, it's quite particular because it's a heavy first leap to really build financial infrastructure.
Oh, great, great. This is very interesting information because digital transformation, especially in the mortgage sector, seems to be something which especially the emerging markets may need to adapt at a rapid pace, because as you mentioned that the banks normally are focusing more on the premium customers. Majority of the population, majority of the people who are actually in need of this thing perhaps get overlooked. Okay, so
100%. So
Ammar,
that's why, just to add one point, I have
yeah,
completely agree
yeah.
in that, and that's why we also, like we really feel that we can generate an impact by basically helping, the masses to get access to those financing, which before was difficult. But please go ahead. Sorry.
No. That's an interesting information. I'm sure not only the panelists but also the audience would be very keen to learn from your experience and what your startup is doing. Moving on to Ammar. Ammar, I hope you are doing well and enjoying this interesting conversation of so much of immense knowledge sharing. From you, I would want to understand how has the venture capital and startup world evolved over the last year?
Yeah, no, absolutely. So I think we earlier, referenced how capital's gotten more expensive. Raising capital for venture funds has gotten tougher. And so, I think that there is a bit of a lag period, but it has now, arrived. And I would say in 2023, you saw a lot of interesting figures. I think it was the most number of bridge rounds that were ever raised in the history of venture capital, meaning that, a lot of just standard round structures haven't been as common. I believe about 40% of rounds are bridge rounds. And so it shows that, to not even thrive, but just survive in this environment, you have to be very opportunistic as a business owner and operator. And I think there are a lot of emerging trends that have gotten investors excited, with the rise of AI and even hardware and software companies that have continued to scale. But for the most part, I think it's been re-evaluating the financial operating model altogether for businesses and adjusting it to be more capital efficient.
Okay, great. Ammar, a lot of startups, even big complex organizations, they are adapting to a business model of partnering with other organizations through partnerships, so they are expanding. So, what, in your opinion, successful partnerships in today's time are doing for building companies, or how partnerships can enable development of new startups and companies?
Yeah, I think this doesn't only apply to partnerships in themselves, but there are B2B partnerships, but also any really, any type of partnership. I'd point to probably three things. One is aligning on, a long-term goal or vision that they hope to accomplish together and being committed to that. I think that's very important to get right from the outset. Another thing is having a unique value and skill set that they're bringing to the table.
Ammar, you may need to repeat your point. I think there's some breakage in your voice.
Okay. Can you hear me now?
Yes.
Perfect.
You may have to repeat your last point because your voice was breaking a lot.
Yeah, no worries. So, just to sum it up in 3 points. One is, aligning a long-term vision or goal, which is, one should remain committed to and work towards. And I think even openly communicating that is very important. The second point I was getting at was having, a unique value prop or skill set that you're bringing to the table that the other partner wouldn't be able to accomplish without you. That way, you're both bringing unique value to the table and can have, a mixture to have success long term. And finally, I think I think in an organization, whether it's a B2B partnership or a partnership between two individuals or multiple individuals, I think just having open communication and, and in the world that we live in and, this space in particular, things move so fast. And so openly communicating, setting cadences to catch up and chat through a lot of details can prevent, any assumptions or misunderstandings that can harm our partnership long term.
Okay, great. So in partnerships, different expertise are being brought together towards a success factor. But at the hindsight, what is it that must be kept in mind pertaining to partnerships? Because partnerships are either partnerships or alliances, as I understand, there are some strategic level decisions and strategic level moves and contracts and all those things that take place between them. But however, is it something like putting one's egg in one's basket, all eggs in one basket? Because if partnerships don't turn out to be something fruitful, what are the what should be there at the back end for sustainability factors?
Yeah, I mean, I think the most successful partnerships are, as they say, 1+1 = 3. And so I think that's what enables both organizations to succeed. In terms of, staying committed and to a single partner, I think that just comes down to value alignment. And, of course, that's also very important and probably goes hand in hand with aligning with a long-term vision or goal.
By the way, I don't believe in partnerships among startups. Sometimes, you have like 2 early stage startups, and then there's like, okay, let's partner up. Usually nothing good comes out of that, right? So if you want to partner, it's between like a bigger organization and a smaller one, that usually can work, but between 2 small organizations can be often lead to disaster. So it's like, it seems like you're doing work, but actually it might not lead anywhere. That's just personal experience, sorry.
So basically, what I understand from Ilya, your point is that startups are new, that they should have somebody to supervise them or actually pull them up, not go side by side with them.
Correct.
All right, great. Thank you, Ammar, for such insightful information from your side, from your experience. One more thing I would want to ask you is, since you've been, you're an investor in different startups. So as an investor, what are the key elements that you look for in an idea or in a venture or in a startup that actually prompts you to make an investment? That's a lot of money going into somebody else's pocket for building something which is probably not there in the market, and it's tried and tested, although through prototyping and iteration, but then it's something not largely available to the greater audience.
Yeah, I mean, I think there are several factors that goes into making an investment decision. I think in the interest of time, there's no need to get into all those details, but I think it could be simply put, just finding a founder to be highly impressive and investing like it's your last investment as a firm. And so, like, for example, we invested in a corporate cards company in Latin America called Clara. And we were introduced through a warm introduction to the founder, and the founder was originally based out of Mexico, where the company was initially marketing to, and went to university in the US at Yale and later at the Graduate School of Business at Stanford. But he already had a lot of operating experience operating at some of the largest and fastest growing startups in Latin America, and even exiting in his his prior company. And so when he founded Clara, it was a much easier kind of investment decision to make. The founder had prior experience and has regional experience, and I think the problem in itself was pretty clear. There was already some US counterparts in Brex and Ramp that were some of the fastest growing startups in the world to get to unicorn status. And so when you take all of that into account, I think it made for an investment that turned out to be successful. But in the case that even if it wasn't, it was a risk-adjusted bet and something that, as an investor, we can appreciate and look for.
All right, great. Thank you so much, Ammar, for all that you're sharing with us. Mohamed, Hisham, I move on to our next panelist for some insightful information on startups and successes to finance that surfaces out of having your own business. Hisham, I am very keen to know your journey pivoting from banking, where you would receive a monthly fixed paycheck, and into starting your own business.
Yes, perfect. Um, I will tell you my story in a brief. I was SME's director for lending. I was giving my team the access to have credit for their customers. So I was the person who get approval for funding. And here to start my story. I have received a request from a breeder, a poultry breeder, to have a loan, but unfortunately, I couldn't make a credit assessment for him. That's why I have left all my work and started my startup. It's for providing small breeders, poultry breeders, access to finance and access to market as well. So I have created an artificial intelligence algorithm which can identify the proper care scoring for each poultry breeder, and by then there is a marketplace. They can buy and sell their poultry through it. So that's in brief what I'm doing. I just made a mix between the market of the poultry, the technology, as well as the lending rationale for giving loans.
That is something very interesting to connect the poultry industry into with the financial sector. Very, very interesting. Can you, moreover, can you share more about your startup, Dajin platform?
Yes, we just started Dajin 1 year and a half ago. And through our journey, we made a lot of enhancement to our business model. It was just for linking the breeders with financial institutions. And by then, we just got a license to finance our company, our customers ourselves. Then we made a backward integration just to make supply for the breeders with the feed and chicks. And by then we took another further step to make sure that all our customer under the umbrella of Dajin, we can provide them with vet doctor. Going into the final step, now we are buying the chicken from the breeders, and we are doing a 360-degree for our customers. That's how the idea can be evolved throughout the timeline.
All right, great. So what is the adaptability rate of the work that you are doing, the service that you are actually providing to the potential market?
Yeah, actually, it's the most hard thing is making the breeders, the farmers, understand how can they request and they do business through the technology. But the key here, when you are telling him that all your production in this app, so he will learn it. It's easy for the adaptability for him, yeah.
And do you have your plans of expanding into other markets as well, especially
Yeah, sure.
developing countries, especially the emerging markets, which are actually agri-based markets?
Pakistan, for instance.
Yes.
Yes. We have some countries under our scope, like Pakistan and Tunisia and either South Africa, which are we have the same market conditions. So we are thinking about this, but I believe this will be next year, not this year.
All right, great. One more thing, Hisham, from your past experiences working in the SME segment while you were in the bank, how has the fintech landscape or fintech ecosystem facilitated the growth of SME sector, and what is the future of it?
Actually speaking, the fintech is doing all the hard job, is doing all the hard thing. You have the technology, you have the vision, you have the networks just to reach the customer. And by then, SMEs or even financial institutions may adapt such growth by giving some like financial institutions, they can give funds to the customers of the fintechs, or even they can do
Guys, we would have to stop
recommend the
meeting
credit
right
scoring
here.
for the fintech companies, just to make it easier for the financial institutions to give a proper credit scoring.
If all three of you were to go back to your learning days, such as when you were in your universities or when you were in college, what would be those subjects or topics that you think now at this point in time you should have studied at that time? One from each of you.
Tough question. I don't know. I mean, in college, I did business, right? So I don't know. Maybe, yeah, maybe a computer science. I mean, some courses would help for sure.
For myself, I'd
Ilya,
take,
you? Okay.
for myself, I'd probably take history, and the reason why is I think Mark Twain's notion where every new idea is a reimagined old one. And so in the context of this conversation, a lot of the most successful companies in the history, especially in the startup world, but also applies to really any industry, is a reincarnation of something that happened in history. And so when you think of the Amazon or eBays of the world, it's equivalent to prehistoric times when there was merchants that used to trade. When you think of a lot of the leading automotive companies, it's equivalent to people using horses to get from one point to another. And so I think on understanding trends that have been taking place for decades, that would be pretty interesting insight to understand.
Okay, great. Hisham, since you joined a little late, let me repeat my question. So just to wrap up this panel discussion, interesting panel discussion, I was asking my panelists what if they have an opportunity, a chance to go back to school, what is that one subject or topic that they should take into consideration? Owing to the current economics and the business industry and how it's evolving.
If I have the opportunity to have something in school, just a topic to have some experience on it, I will choose finance. I'm a finance addicted, and if I have some extra time in school just to get acquainted by a new topic for me at this time, it will be finance.
Okay, great. This is very interesting aspects, interesting information from all my panelists, for which I am very grateful, and thank you so much for joining in. It was quite a task for Future Fest team as well to bring on board panelists from different time zones and having us coordinate all together on a single platform. Thank you all, Hisham. Thank you, Ilia and Ammar, for your insightful information, knowledge sharing, and your time for us. Thank you so much.